tariffs, trading booms, and a crypto comeback. Here's what shook the markets last week. The S&P 500 rose 0.5%, the Nasdaq climbed 1.4%, while the Dow slipped, dragged lower by American Express, and a late-week sell-off sparked by President Trump's renewed push for a 15 to 20% minimum tariff on all EU goods ahead of the August 1st deadline. Still, economic data surprised to the upside. Housing starts beat expectations, and consumer sentiment improved. The University of Michigan survey showed one-year inflation expectations falling to 4.4%, a 5-month low. That helped reinforce expectations for a rate cut at the July 30th Fed meeting. Fed Governor Waller signaled support, citing early signs of labor market weakness and subdued inflation. Treasury yields moved lower across the curve as markets priced in near-term easing, just as the Fed entered its official quiet period ahead of the decision. Meanwhile, Wall Street's top banks had a blowout first half. Trading revenue at the 5 biggest lenders hit a record to $71 billion, driven by volatility in equities, currencies, and rates tied to shifting trade and tax policy. Goldman Sachs posted its best-ever equity trading quarter. Bank of America and Citigroup delivered multi-year highs. Crypto markets also had a breakout week. Congress passed 3 major digital asset bills, including the Genius Act and Clarity Act, bringing long-awaited regulatory clarity. Ethereum jumped more than 20% on the week in response. With earnings season in full swing, the Fed sidelined, and tariff risks looming, investors are bracing for a more turbulent stretch ahead. Want weekly recaps like this and a heads up on what could move markets next? Click the link below and subscribe to the Level Fields newsletter. It's fast, free, and built for investors who don't want to miss a beat. Follow and subscribe for more. Level Fields, Elite Investing, Effortless AI.